My goal is to help you in your quest for financial freedom. My goal is to help you by presenting what we've learned in the last 10 years, 4,000 customers, every financial market that we've studied. My goal is to expose what institutions are doing to rig the game you're trying to play. That's my goal. And we've spent every waking minute over the last decade building what we believe to be the most powerful and technically advanced predictive indicators for retail investors and day traders. Now, that means if you're a futures trader and you're not using this software, you are purposefully putting yourself at a disadvantage. If you're a forex trader and you're not using this software, you are purposefully putting yourself at a disadvantage. You are tying one arm, one leg behind your back and entering a Le Mans series race. And so we've constructed a carefully constructed, transparent, discretion-free experiment for those of you watching today and watching this video from home. We've built in a process that makes it impossible for me to fake the results that you're about to see. We've built a process in place that proves to you and will prove to you responsibly, sans any marketing hype, that you had next to zero chance, few to zero chances of beating the banks at their own game. We live in a world where 1% of the population controls more than half of the wealth in this country, in the world. And so I'm here today to help you exploit their weakness. Banks, hedge funds, institutional traders have a weakness. They have one that we know of, one that we exploit, one that we've built an entire company filled with customers using our product all over the world. They have one weakness. Now, we're going to get into these charts here in just a second. Everybody has a weakness. Everybody has a weakness. How many of you recognize who's in this statue? How many of you recognize the legend, the story of the person in this statue? Anybody? This is Achilles. And as the legend was presented, he was an unstoppable military force. He couldn't be stopped. Steve, he was unstoppable. If you went to battle and Achilles was against you, rest assured you were going to lose the battle. Very few people would survive. A very small percentage. Sounds a lot like trading, doesn't it? And Malaza, if you struck Achilles in his heel, that was his only weakness. And it was virtually impossible to get him in that weak spot. And so today I'm going to show you that banks have an Achilles heel. Now, some of you treat trading like a hobby. Some of you treat trading like something to occupy your time during the day. Some of you are trading with $500 accounts because you heard somebody on the radio. And there are some of you here today who are trying to trade to make money. And the mistake that I made when I first started this company was believing that everybody wanted to make money trading Malaza. And what I found out was there were a ton of immature people, like kids, just kind of messing around, and they'd go into work and tell people they were trading, and they really weren't serious. And then I met people who were at home and they were bored and they were lonely, and they liked being in chat rooms and having guys call them and sell them stuff, and they traded because there was a fellowship, an element of social networking involved. And I don't particularly have time for those people anymore. And then, Melissa, there was a small subgroup of people who wanted to be profitable, who wanted to quit their jobs, who wanted to support their favorite causes, who wanted their contributions to mean something. I know one trader who supports a mission overseas that adopts Chinese infants and toddlers that are born with birth defects. And he sends his profits overseas to help those kids get adopted all over the world because there are no homes for them. I know one trader who's teaching other traders back where he lives in essentially a third world area. His mission in life is to teach people who are living in poverty how to escape that poverty trading the E-minis. He's dedicated his whole life to it. We have customers who are retirees who got slammed in the '08 recession, who have no life savings left, and they're working at a gas station, they're working at a Walmart or a Kmart or a McDonald's, and their wife or their husband turns to them in the afternoon and says, "What happened? We had a plan. Where did it all go? How come nobody went to jail?" If you're in that group, then this webinar is for you. If you're one of those other people, just leave now. Please don't waste your time and my time. If you're just poking around and banging from room to room and sucking up as many free indicators as you can, and you like jerking people's chains and you're not really serious about this, if you don't wake up every morning and look in the mirror and say, today is the day that I will be consistently profitable, I will follow my trading rules to the letter of the law. Success for me is when I follow my rules. When I follow my trading rules, my rules lead me over time to profits and success. If you're not there yet, none of what I'm about to show you is going to make any sense. But there's a small subset of you. It might be only one person today. I'm talking to you. We're going to show you how this works. Please keep in mind that trading is an inherently risk-laden activity. Never trade with money that you can't afford to lose. Do not invest money you cannot afford to lose. Familiarize yourself with the risks associated and involved with trading, and if necessary, we recommend that you seek independent professional advice. Okay. Now, do institutional behavior patterns exist in the market that you trade? Is the game rigged? Is the game rigged? Who runs the financial powers of our world? Goldman Sachs, Federal Reserve. Why do former Goldman Sachs bankers keep landing top slots at the Federal Reserve? During the last year, in 2015, 3 vacancies opened up to head regional Federal Reserve banks. They all went to Goldman Sachs alumni. Steve, what is the Federal Reserve responsible for? What does the Federal Reserve do? They print money, right? They set the interest rate. Who's all that money been going to for the last 10 years? That zero interest rate money. Huffington Post. The Fed just can't stop hiring former Goldman Sachs bankers. This time it's the head of the Minneapolis Federal Reserve Bank. Okay, so while the stock market's been going up and up and up, what's the federal debt been doing? So we've been printing more and more and more money. None of that money is going in your pocket. None of that money is going in my pocket. It's not going into the roads. It's not going into our infrastructure. And yet, at the end of all of it, these guys are laughing the entire way. Why Goldman Sachs thrives in government? Do institutional behavior patterns exist in the market that you trade? The answer to the question is yes. But the problem is, no one believes me. No one believes me. No one is coming to rescue you. That's the last point I want to make before I show you this experiment. Let's set the tone of this, nice somber tone. No one is coming to help us. We are all we have, each other. Melissa, nobody's coming to help us. The brokerages aren't coming to help us. Most vendors aren't coming to help you. Can I tell you this weekend what I heard in my car? Melissa, driving around, I was driving home, and in my car I was listening to the radio. And as I was listening to the radio, I was tuning around, and there was a guy on the radio, and he was saying, Bob, I go home, and I've got a computer program, and most people don't know that you can make money in the markets when the markets are going up and when the markets are going down. He said, I went home the other day, and on my computer screen, Melissa, there was a big red arrow, and my computer algorithm was telling me to sell. And I sold the market, and I made money. And then, Bob, later on that day, my computer program had a green arrow on it, and it told me to buy. And I got to tell you, Bob, I made a lot of money with this program, working from my home, no boss. And Steve, I vomited in my mouth. My heart was racing in my chest. I thought, I'm going to call into this station and somebody's got to stop this. That's not how it works. There's no such thing. There's no program. Bob, I have 2 lines on my computer screen. That's it. It's clear. It's simple. It tells me when to buy, and the algorithm tells me when to sell. And I live at home, and I work for myself. Anybody hear a commercial like that? Anybody ever hear a webinar like that? And I thought to myself, maybe I'm doing this wrong. Maybe I should do like these guys do on the radio. Maybe we'll just do a red arrow, green arrow program. And we'll tell people what they want to hear. We'll tell people trading is easy. You just got to fund an account. You just got to open up with a brokerage. Slap this program on your screen and boom, buy and sell, baby. It'd be really easy to say that, wouldn't it? But I think you'd lose a little piece of your soul. Because it's a lie. It's a lie. How does this work? I'm talking to the one or two people today who want to be profitable, who want to be consistent, who want to recognize that they are going head to head every morning, every afternoon of their lives with one of the most powerful government entities in the world. An entity that has access to innumerable financial resources, that creates and destroys wealth at will, ad nauseum. And I'm going to give you a chance to fight back and exploit their one weakness. Every Tuesday, I send an email out to about 18,000 people on my subscriber list. Every Tuesday, I send an email out. And inside of that email, many of you who are my customers got that email on a Tuesday. John, remember when you got that email? Sean, remember when that email came in? Erwin? Bruce? Luis, remember when you first got that email from me and you thought, that sounds interesting. Maybe I'll check it out. And in that email, I gave you forecasts, histogram projections for Wednesday and for Thursday. And I sort of taunted people. And I said, hey, if you'll just give us a chance to prove it to you, we can tell you in the future when the banks you're trading against are most likely to push the markets up and most likely to push the markets down. And so many of you are here today to see if that's the case, because every Thursday, Malaza, every Thursday, we come out of the markets after that. So the forecast is sent out on a Tuesday, and then for these 2 days, we just watch. And we watch and see what happens at the times. And then on Thursday, Malaza, we come out and answer the question, did it work or did it fail? No other vendor does this. No other NinjaTrader partner does this. No other Thinkorswim developer does this. No other TD Ameritrade partner does this. No other MetaTrader 4 or 5 developer has a tool that will do this. There is no TradeStation tool that will do this because nobody wants you to see it. If they do know, they're not sharing. It's that good. It's hiding in plain sight. Now, why does this work? This works because of one simple fact. Those with the gold rule. Credit Suisse, Merrill Lynch, Deutsche Bank, Barclays, Vanguard, Citigroup, Morgan Stanley, Goldman, JP Morgan. They set the rules. But there's a problem. There's a big problem. They follow behavior patterns. I went to a webinar once, and the lady who was teaching the webinar for NinjaTrader's educational series, she billed herself Melissa as a former computer programmer for institutional traders. I still have the interview somewhere saved on my hard drive. And she said, the market is based on people who do the same things every single day. Every day at the exact same minute, the market does the exact same thing. The key is you just have to know what they're doing, what they're all set up to do. And I'm sitting here saying to myself, why is she telling people this? Why is she telling people about these times? And then I learned that later on she was completely wrong. That it wasn't the exact same minute every day. It wasn't the same things every single day. The times did vary. And I think she was holding that piece of information for herself because it was a lie. And it made me dig deeper. But what was interesting for me is that she said, hey, all the banks are doing this. Everybody's got the same time-based system. And I started to meet customers like Ernie, who came from a bank. And he said, Michael, I've been looking for the software the bank I used to work for uses. Yours is the closest one I found. I have another customer, I think his name was John. He said, I used to be a pro trader for a bank. Do you have a copy of the software that they were using for timing? And I said, I don't know anything about that. I said, oh, well, I just assumed that you were selling it to them too, because your stuff is almost identical. And I said, okay, let's do this. Every Tuesday, we send out histogram forecasts for the markets that you trade. Let's take a look at that webpage. And I promise this won't be like the radio commercial. I'm going to be straight up with you. I'm going to be honest with you. I'm going to teach you the things that I teach members of my own family, my father-in-law, my brother-in-law, my son. Every Tuesday, I send out a link to this page. And I give people the histogram forecasts for the market in the future. So the chart on my screen right now is a computer output that anyone can generate. It's a computer output that anyone can generate. And this particular output was the forecast for gold futures on Thursday that I gave everybody on Tuesday. So 48 hours after I sent out the last forecast, we have this. And so the question before us, Thomas, the question before us, Richard, is whether or not this piece of information was useful or relevant at all. Did we catch the banks with their hands in the cookie jars at these times? Was it possible to know the times that the banks were going to push the markets, the Goldman Sachs guys? Were we going to catch them with a flashlight? I'm the father of a teenage son and a teenage daughter, and Melissa, it scares the hell out of me. You know why? Because I remember what I was doing when I was 17 and 18 and 19, living at home. I remember nights where I was praying the garage door in the back of the house didn't make a squeak. Anybody ever have that experience growing up? You're trying to get out of the house, waiting for everybody to fall asleep. I was not the perfect kid growing up. But I have 2 kids that have my genetic code living under my roof. 3 if you count the young one that I worry about the most. This software is a squeaky door, alerting us to the times that the banks are trying to sneak orders into the market and sneak orders out of the market. This histogram forecast was an alert telling you on Tuesday when to be prepared to trade. Now, is it going to be 100%? No. If it was 100%, you wouldn't hear my voice on the internet anymore. Because I'd be with my new friends in the Bahamas singing one love, one life, let's get together, and sipping something out of a coconut. It's never 100%. That's inside trading. Ask Martha Stewart about that. You know, Martha Stewart didn't go to jail for insider trading. She went to jail for lying about insider trading. Some weird stuff going on. So what does this histogram represent? That's what I want to show you. And I'm going to give you a path forward here today. Here's the agenda for my afternoon. Number one, what is a histogram? What is it trying to tell us? Number two, did the information we had 48 hours ago do anything relevant 48 hours later? And that's going to lead to a yes or no question, a pass or fail. But Malaza, here's the problem. Richard, here's the problem. Francisco, Joe, Jorge, here is the problem. If this worked, and if I prove to you that we know 2 days ago what the banks were going to do most of the time in the markets we sent forecasts out for, if this is true, what are you going to do about it? If this works, then almost every piece of software that you've purchased from all of the radio salesmen in your life was a mistake. If this works, then you'll have to admit, like so many of my customers did, that you got suckered into a hope and a dream. And I'm going to tell you right now, that's a hard place to be. So I'm very respectful. This is a very sobering thing that I'm about to show you. Because while it's going to be successful, while I'm going to prove to you this works, otherwise why would I do it every week? There's a moment of pain coming where you sit back and realize, damn, I had no idea when I called that guy on the radio. I had no idea when I answered the phone and the webinar guy called me. I had no idea when I attended that event, when I went to that conference at the Hilton. I didn't realize what a line of crap they were giving me. And that's okay, because we're here today and there are answers. This is a histogram forecast. The computer is essentially answering a question that we're asking it. And what we do is we send the computer back into the past using a process known as data mining. Now, I could use a fancy marketing term. I could use words like artificial intelligence. I could use words like algorithm, algorithm, algor. But I'm not, because what we're doing is we're programming a computer to look for times in the future. Today is Thursday. Tomorrow is Friday. So Steve, I can program my computer right now with the FLUX tools to look back into the past. And Steve, I can go back into the past with the software and ask it a question. I can say, hey, before tomorrow's market, let me ask you a question, computer. Were there any times Thursday, Wednesday, Tuesday, and Monday of this week where the markets went up or down consistently at a certain time. Does everybody understand that question? Kishin, do you understand what I mean by that? Jorge, do you understand that question? Francisco? Bruce? I can ask the computer, hey, are the banks consistently pushing prices higher or lower over the last week or so? And when I go left to right like that, Melissa, that is a horizontal analysis. Because on a calendar, we're looking left to right, right to left. We're not limited to that, however. One of the other things that we've discovered works really well, Malaza, I can send the computer this way into the past, right? I can say, hey, computer, how about the last 2 or 3 Fridays? Are there any times over the last 3,500 bars of data on a Friday? Are there any times over the last 4,500 bars of data on Fridays where the market is consistently going up or consistently going down? And we would call that, Luis, a vertical analysis, because we're looking up and down on a calendar. Now, this discussion stimulates thought and it stimulates research. You're going to feel a part of your brain hurting that you haven't used for a while, because most of the vendors out there sell gummy bear indicators that don't work, or they print 5 bars later, or they print a signal and it disappears when the signal fails. Most of the people that a lot of us worked with before we found this tool were gummy bear indicators. They were fluffy, they were cotton candy, and they melted in the sun when you tried to use them. So I want to stop here and just pause and realize this is pretty revolutionary in just understanding what it does. No vendor tells you what their program does, by the way. Most of them use a word. What word do they use, Melissa, when they describe their program, if you want to know how it works? Anybody remember the big word that they use to describe it? Mr. Trading Vendor, how does your program work? It's proprietary. It's a secret. Shh. I can't tell you. I have to kill you. I don't know if it's IE or EI. I'm not good with spelling. Since autocorrect came around, I'm useless. But here I'm telling you how the software works. And so what we've done here, Malaza, for the experiment, is I've given you the vertical forecasts for Wednesday and the vertical forecasts for Thursday. And Malaza, I sent the software back into the past 2 weeks. And what you and I are going to look at right now is the result of what happened when we sent the software back 2 weeks worth of Wednesdays and 2 weeks worth of Thursdays. Malaza, does that make sense? Because when we sent it back, the computer took over 3,000 bars of data for Wednesday, and it squished it up, and it came back and gave us one of these, and that was for the next Wednesday. And then Richard, for the forecasts for Thursday, we sent it back 2 Thursdays into the past. And the computer said, all right, let me take the data. There's over 3,000 bars of data. and Malaza, it did the analysis, and it found the highest probability times for the following Thursday. And so I had all that information to send to you on Tuesday. Malaza, if that's the case, I already have the times for tomorrow, don't I? I already have the times for Monday. I already have the times for Tuesday. I already have the times for Wednesday and Thursday of next week. I have those times because I have 2 weeks of data right now for Friday. I have 2 weeks of data right now for Monday. I have 2 weeks of data right now for Tuesday. And I have 2 weeks of data right now for Wednesday. And as of an hour ago, Malaza, I have 2 weeks of data for Thursday. Does that make sense? When I use a vertical analysis, I always have the forecasts how many days in advance. When we use a vertical analysis, Steve, we will always have the time patterns 5 days in the future. And that means you can know when to trade 5 days in advance. You can plan when your setup will be executed. How many of you suffer from that analysis paralysis? How many of you, when you're sitting at the computer, you get that headache where, Melissa, it feels like every bar is a potential trade, and it feels like you got to do something. I got to do something. I got to be in the market. This looks like a good area. What if you could know in advance when the markets were most likely going up and down? And Steve, what if we had something like a train schedule? What if we had something like a train schedule where we knew in advance when the markets were most likely going to go up and going to go down? If you've ever taken a trip on an airplane, you don't just show up at the airport and say, hey, you guys got any planes that go to Newark? I really got to get to New Jersey today. You look on a schedule online. You show up 3 hours before the plane takes off, a half hour before they start to board. Why do you think the banks are any different? So this week, I sent you the forecasts for Wednesday and Thursday in advance. Now, let's take a look at what the forecast was for gold. Here it is. What does it mean? Well, in its most basic form, and we're going to work from basic to complicated. Some weeks I have a tendency to give everybody everything at once. So get ready. Here we go. Malaza, this was the time map for Thursday's gold trades. This was the plain schedule, arrival and departures of buyers and sellers for Thursday, as best as a computer could find, as good as your computer could look for it. And here's what this schedule means. Here's how you read it. Everywhere you see a timestamp below the 0 line was a time the computer was telling you, Malaza, watch out, because the banks are probably going to try to push the market, which direction? Which direction do you think the banks were going to try to push the market at these green times below the zero line? What do you think? Upward, exactly. See, you're doing great. And Malaza, if you had to guess, just looking at the histogram, which one of the times do you think might have been one of the most important upward times to watch for? Without knowing anything, if I just handed you this and said, you got to take one long trade on Thursday in gold, what time would be most interesting to you? $10.30. Exactly, between 10.25 and 10.35. See, you averaged those two bars. Right off the bat, that tells me you get this. So, great job. Everybody, put your hands together for Malaza. You did great. Thank you. Okay, so we'll put a question mark here. And remember, you had this since Tuesday. No way to fake it, right, brother? Vice versa. If we look at the times that are above the zero line, Luis, what are we anticipating to have happen at that time? At 4:25 Eastern, and 6:25 Eastern, and 9:20 Eastern, and 12:20 Eastern, and 1:55 Eastern, 6:20 Eastern, and 3:05 Eastern. We're looking for selling pressure, right, Malaza? The computer is saying, if you arrive at these times in the future, there is a high degree of probability of the markets falling. In the past, banks have exerted selling pressure at this time over the last several thousand bars. Okay. Now, would you like to see what happened at these times that a computer generated for 4,000 customers 2 days before the market got to those times? With your very, very, very basic understanding. Let's see if Malaza's big trade worked, shall we? These are the histogram times that we just looked at, Malaza, together, right? These are the big histogram times that we looked at just now. Gaze upon its scientific glory. Ah! Now, Steve, I made a mistake when I made this software. Apparently, the guy on the radio says I'm only allowed to use 2 colors and 1 line. And when the arrow shows up, everyone in the universe is supposed to buy. And when the other arrow shows up, everyone in the universe is supposed to sell. This is going to be a little more complicated than that. I made a mistake. I chose the high road. Let's take a look. Malaza said we should have bought the market at 10:30. Okay, so Malaza, we're going to look at one bar, you and me, right now. That's your bar, right, sir? That candle opened, and Malaza, you took a lot of heat on this trade. When you bought, you took a tremendous amount of heat. It went against you 1 tick. That's tough. Now, Malaza, how long did your 10:30 trade have to work before the first sellers were supposed to show up? Steve, if Malaza bought at 10:30, looking at that chart, when were the first sellers supposed to show up? How long did his trade have to work? Anybody? Let's add one more layer to the onion. This is when he said to look for a long, right here. Using information that we all had 2 days ago. Before the market ever opened, boom, boom, boom. Okay. He had until 12:20. Malazi, do you see why? That's the first place the software told us that buyers run into sellers. Does that make sense? Okay. So let's take Steve's piece of information and let's combine it with Malazi's entry and see how we did. From Malazi's entry, the market went up 1 5-minute bar, 2 5-minute bars, 3 5-minute bars, 4 5-minute bars, straight up. And Luis, it terminated, the highest it got ever was 82 ticks. If he said, you know what, I'm going to hold out until 12:20, and we got to 12:20 just when that candle opened, Steve, he finished with 8 ticks under 82. So 8 divided by 82 times 100, what percentage, whoops, 8 divided by 82 is 9%, 9.7%. So that means, Malaza, if you just use that piece of information, no stops, no targets, you just use time based on that one thing that you figured out all by yourself, the trade went 1 tick against you. It went 82 ticks for you. You got out with 90% of the available profit. And Steve wrote, you would have paid for 33% of the software in one trade. Is there anything factually inaccurate about that statement? No, right? In fact, let's continue. Let's see what percentage of the time the signals we were waiting 2 days for, Malaza, came to pass. And I usually ask people here, and it comes across as really arrogant, but I'm going to tell you, at 3:05, Malaza, we were expecting sellers. And at 3:05, 36 hours later, the sellers showed up. And they drove the price of gold down. And then at 3:45 and 3:50, we were waiting for the buyers to come in at Goldman Sachs. And there's the Achilles heel showing up. And it went up about 7 ticks until 4:25. And then Malaza, we were waiting for them to change sides and drive the market lower into 5:25, which they did, just a small amount. At 5:25, the price didn't go down or up, it just stayed the same. So no real profits or losses there, but at 6:20, the poop started to hit the fan, didn't it? At 6:20, stuff got real and we had another big move, 6:25. So Malaza probably would have went short somewhere in the middle of this candle, right? If we use his same theory, there were 2 times near each other. So Steve, the Malaza entry would have been somewhere around the middle of this candle, about 2.5 minutes in between the two of them. Fair? Ready? Okay. If we did that, the trade went 5 ticks against you. And if you got out at the next buying time, the trade went 16 ticks for you. In fact, if we keep track of this, it went 19 ticks for you here. It went against you 2 ticks. This one went against you 0 ticks. Malaza, this one went for you 16 ticks. Now here comes the next one. Ready? If we got in at 740, it went 1 tick against you. And it went 61 ticks for you. Malaza, if you got in at the candle close at 920, it went 5 ticks against you. And it went 24 ticks for you. And then we have the wonderful Malaza entry right here that went 73 ticks. So Steve, what's the total? Has anyone been keeping track? 10 plus 16 plus 61 plus 24 plus 73 minus 2 is 182 ticks, or $1,820 by lunchtime from the U.S. lunch to the, more than that, Steve, it's closer to it's like 90% paid for in one day. Okay. And so if we look at this, let's look at it from a statistician's standpoint. We've looked at it from a financial standpoint. What percentage of the signals worked? That one worked. That one worked. This one worked. And this one worked. The one at 1220 worked. And this one worked for a little while, but we'll call it a failure. The one at 155 worked. And then we kind of went into the close. I'm going to ask the question that I love to ask every week, and I need 10 people to answer the question for me before I can continue. Because I don't tell people how the software's accuracy is. I let other traders tell the people who are looking at this what the accuracy of the software is. Malaza, was it 0 to 25% accurate 2 days later? Was it 25 to 50% 2 days later? Was it 50 to 75% 2 days later? Or was it 75 to 100% accurate 2 days later? I need 10 people to answer that question for me before I can continue. Which one of these 4 boxes One, two, three, four, 6 more people. 5, 6, 7, 8. 2 more people, please. 9. 10. 72, 75 to 100, 75 to 100, 75 to 100, 75 to 100, 75 plus, 75, 85, 75 to 100, 70 to 100. The lowest number anybody wrote was 70%. When I asked a question to a community of traders who are actively trading that have no financial ties to my company other than being customers, not one person here said the results were less than 70% accurate. What does that mean? What does that mean? And most everybody else said the results were here. Malaza, it means that the market, this market, when we asked 2 days in advance if the banks were going to do some sketchy stuff, if they were going to do some illegal stuff, when I sent you that email 2 days in advance and we got to Thursday and we came out, was it good or was it not good? It was good. 70, 72, 75 plus % of the time. It means the banks had a plan. It wasn't fair. There's nothing fair about this. They were going to do what they were going to do no matter what. No matter what. They had a plan. Was it just gold? Was it just gold? Is the question. Wayne writes, WD Gann was right. What did Gann say, Wayne? Here's what he said. Ready? You're going to bring it up. I'll make a mention of it. Time is the most important factor in determining market movements. And by studying the past records of the averages of gold futures, of the averages of the euro dollar, of the averages of Apple, of the averages of crude futures, of the averages of the E-mini S&P, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. He wrote that 1920s, 1930s. Has anything changed in 100 years? No, because most people didn't believe him then, Steve. In fact, almost everybody thought he was an idiot. They didn't like him because they made him think. He made people think about this. Now, that wasn't the only forecast I gave you. I also gave you one for the most popular futures market traded today. The most popular futures market traded today. In this ring, weighing 500 million pounds, the E-mini S&P. No market kills more accounts. No market makes brokers richer faster than this monster right here. Malaza, when was a good time to buy and sell today? Don't answer. Keep to yourself. But with our basic understanding, the computer was saying, Michael, I've gone back thousands of bars and I've used my processor for something important. Most people use their computers for checking Facebook, checking their email. My father-in-law uses it, Melissa, for Cortana. He loves talking to the woman in the computer. It's fascinating. He had a guest over. His granddaughter came to visit him, and I asked her, I said, has Grandpa been using the Cortana? And her eyes got real wide, and she said, yeah, he loves that thing. This is your Cortana for trade times. This is your Alexa for trading times. This is your Siri. The computer is going into the past and bringing that information. Siri, what times are the E-mini S&P most likely to go up and down on Thursday? Blink! According to my studies, we're watching for a drop at 9:15, followed by a trend reversal at 10:30 with a punctuated move at 10:45. Be aware that there's a potential for chop from 12:05 to 12:30, followed by a drop at 1:20 in the afternoon. Bing! But computers can't say that. We can look at the graphics, though, and see it, can't we? Everywhere the timestamp is below the zero line is the computer warning us about buying pressure. Everywhere there's a timestamp above the zero line, Malaza, the computer was warning us about what? Selling pressure. Now, I'm introducing a third pattern. So far, Malaza, you learned this one, pattern number 1. And I'm just picking on you because you've been answering questions. But Richard, I could ask you this. Joseph, I could ask you this. Glenn. Pattern number 2 is the selling pressure, right, Melissa? Those are the times we're looking for the banks to exert selling pressure. Pattern number 3, Steve, is this monster right here. When you see the market on the trend histogram, there are 2 histograms. Did you notice that? The bottom one is trend. And the top one is momentum. When you get to a pattern that looks like this, Steve, it's pattern number 3. And when we get to a pattern number 3, Steve, I expect chop. If this pattern were a snake, it would go around these times. Don't touch me. Stay away. Don't go near me. So now we're going to ask the question. Did the times do what we were expecting them to do? Did the banks push the markets 2 days later like a bully at these times? Did the things that we were expecting them to do, a small little segment of the trading population, we're talking about thousands of people in a universe filled with millions and millions of traders. Less than 1% of the trading universe is watching this because no one else believes it's real. Did these times do anything when we got to them? Take a look. Malaza, we were waiting for buying pressure at 6:30. Look at what happened. Boop, 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 ding, dong. Steve, what were we waiting 2 days for? We were waiting 2 days for 9:15. Boop, 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 boop. Malaza, what would we have done at 10:45? What do we do from 12 o'clock to 12:30? Nothing. Chop, 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 chop. 12:30, 12 o'clock. So in here, we do nothing. That's the chop zone. So Malaza, guess what? In the chop zone, nothing gets done. When was the next time we were supposed to wait for something, Steve? After the chop zone. Matter of fact, let's make the chop zone white and pretend that it was never there. Stand by. If it sounds like I'm having too much fun, it's because I am. The next time Malaza was 120. And what were we expecting the market to do at 120? Go down. Ready? Little move. And then after that, in the afternoon trading, 225. It actually goes against you the most we've seen so far. Into the close. So here's my question. Did the E-mini S&P do what it was supposed to do, or do what the computer warned us might happen in that 70, 72, 75% window of accuracy 2 days later? What do you think? Is there anyone here who would say that the ES wasn't accurate, that the banks didn't fudge the market up? Because right now, all of us agreed that 2 days later, gold futures worked. Can we say the same thing about the ES, Malaza? Did we catch them with their hands in the cookie jar 2 days later? Luis thinks so. Let me ask you this question. Is there anyone who says, no, it didn't work? Okay, so that's two. Two signals, or three patterns in two markets. And so far, if I ask the question and say, is it 60 to 70% accurate 2 days later? So far, we've said yes. Interesting. Very interesting. Are you starting to see why trading is so hard? Are you starting to see why trading is so hard? Are you starting to see why 90% of people are failing doing this every day? Malaza, how fair can it be if the banks were going to do what they were going to do anyway, despite the news, despite the reports, despite price action, despite the value of any of these stocks? How fair can a market be? Okay. Any questions so far? Some of you are bonds traders, and I always forget to show people the bonds market. If you're a bonds trader, I know Melissa looks at bonds, but I'd like for you to see what the market did at the times today in the bonds market. Malaza, this doesn't look like a random market either, does it? And here's where things get really weird. Ready? We already have the times for tomorrow in the future. Did anyone catch that? We already have the times for the future right now. 11:50 tomorrow, there's supposed to be buying pressure. 9:30 tomorrow, there's supposed to be selling pressure. 8:10 tomorrow is supposed to be buying pressure. There it is. It's in the future. Why do we care? Lincoln, why do we care about anything on the right-hand side? Richard, why would we give a rat's ass about anything over here in the future? Because when we gave a rat's ass over here, look what happened at these times. Look what happened at 1:40. Look what happened at 9:10. Look what happened at 11:30. Was the software accurate 2 days later in bonds? Yeah. Okay. Let's take a look at some other monsters. How about crude futures? This one's going to hurt. If your head wasn't throbbing, this one's going to hurt your head a little bit, because we're going to learn two new patterns. We're going to learn two new patterns with this one. Ready? Just to review, you guys said, with very little information, anywhere we see a timestamp below the zero line, Malaza, we were expecting 2 days later buying pressure, right? Malaza, if you had to take one trade based off of this information that I gave you 2 days ago for crude, using only the information that you had from me for Thursday, what time, Malaza, would you have taken a trade? And in what direction? Having never seen my software before, having never spent hours and hours studying like most of the people here, Wayne, what looked like a good area just looking at the behavior pattern of the banks, now that we have some clue what to watch for? Anybody? Wayne has two ideas. One idea, anyway. He said, Michael, I'd be watching somewhere around here. Okay. Malaza said 1035. Okay, so we'll look at that. Melissa, how about over here? Glenn says around 11:18. Okay, you want to see how you did 2 days later? I understand, Bruce. When Kristen made the forecast for this week, she used the old contract. She didn't know. Ready? Buying pressure at 7:30. It worked. The bank's trying to push price up at 7:35. Malaza, look. And then at 8:18, look, it's the high of the market. And look where the market goes. We caught him. When everybody was buying Malaza, what did the market do? It formed a high and stopped everybody out. The histo was for 08, Bruce, that's true. I can change this over to an 08 if you want to see. It's no big deal. It's just going to look like that. The times, because the contracts are following each other, Bruce, the prices will be different, but the times are the same almost, if that makes any sense. But take a look. How far off were we? The only one that was squirrely was this one at 11:09. And Malaza, that one went the opposite direction at that time. Were the forecasts for the 09 contract, Bruce, in a 60-70% window of accuracy? Who wants to learn 2 more patterns? I can teach you 2 more patterns. We've learned 3 so far. And we'll look at 2 more markets. Any currency traders here today? Okay. First one is the Canadian dollar. Canadian dollar. Glenn, I gave the forecasts out right here, right? This is around when I sent the email out. So Glenn, all of these forecasts were behavior patterns that we were waiting 2 days in advance for, or hours in advance for. And I want to show you some stuff here. Ready? We're going to go back and look at 2 more patterns. We had a selling pressure signal at 6 o'clock that worked. We had a buying pressure signal at 8:30 that night that worked. We had 2 buying pressure signals. If we followed the Malaza trade, he would have said 135, I'm guessing. The market went down at 5:15. It pushed up a little bit at midnight. We had a little tiny move down in the Asian session. And then we had a big move down right here, Wayne. And then the market moved up from 12:30 into 4:45 this afternoon. Is everybody okay with those signals so far? Any shenanigans? Put a little blue arrow right there. Now, I want to talk to you about two of the signals. And you're going to learn patterns number 4 and patterns number 5. And to learn those, I need you to look in your handout. Yeah, Bruce, it sure did. Let's take a look at why. First thing, let's look at the 945 signal. $9.45. Can everybody see that at 9:45 it came all the way down into that time, and then Malaza, it moved up out of that time? It went the opposite direction at the correct time. It was a red dot, but Glenn, it went straight up. I'd like you, if you would, to take your handout in the GoToWebinar handouts section, and there's a book called The Hitchhiker's Guide to the Histograms. And Glenn, I'd like you to turn with me to page number 15. Would you all do that for a second? Let me know when you get there. Okay. There are two patterns in your handouts section that are inversions. There are two patterns, Bruce, that are inversion signals, meaning we expect them to go the opposite direction at the correct time. And so right now in your handouts, Bruce, we're looking at pattern number 4, this guy right here, where instead of there being a down move, Bruce, it goes up. Okay, and I sent everyone this histogram guidebook on Tuesday. And the conditions of a pattern 4 are mechanical in nature. They require zero discretion and behave as follows. Number 1, if there is a prior swing low, we mark it. So anywhere before the time arrives, Bruce, we're marking or looking for swing lows. So Glenn, on the CAD chart, can you see there's at least one swing low here? And maybe a baby one right there. But the one that's easiest to see, there are kind of two of them, right? There's a swing low here for sure. And Glenn, maybe a swing low there. Would you agree with that? In theory, anyway. So one of the first conditions for a pattern 4 is locating the prior swing low. The second condition is the most important. If either the time signal itself, the candle to the left of the time signal, or the candle to the right of the time signal violate or equal to, are less than or equal to the prior swing low, then Glenn, whichever one of those 3 candles meets that condition, we're going to give them an exhaustion arrow. We're going to give them an exhaustion arrow. Does that make sense? Because when we usually see that pattern, Glenn, this is the book I gave you 2 days ago. Do you see what sometimes happens at that inverted signal? Do you see how it goes the other direction? This is the infamous pattern 4, and it's weird. It's very weird. Okay, but it's one of the 5 patterns that I'm going to teach you and that you'll learn before today is over. So if you look at pattern 4, what's expected is a reversal in the other direction. Pattern 4 is a variation of pattern 2 because we expect selling pressure and we get buying pressure. How do we feel about that pattern? Okay, so over here, what I'm going to do, big guy, is when I get to 945, look, the candle to the left of 945, Glenn, was a lower low than either of these two swing lows, right? 945 itself was an even lower low, right? And so, Glenn, I'm going to put a number 4 right here to remind us that it was a pattern 4. This one was a pattern 1. You already learned that. And Glenn, this one was a pattern 2. These two were both pattern 2s. This one was a pattern 2, rather. These two were both pattern 1s. Forgive me. The next one was a plain Jane pattern 1. This one was a plain Jane pattern 2. So, Glenn, so far so good? Okay, now I'm going to introduce you to pattern number 5. Just so you know, I didn't make it up to make the book look good. I sent you the book 2 days ago. In fact, this book's been in circulation for like a year, 2 years. And I want you to scroll down with me to page number 18 and page number 19. Page number 19 is like page number 13. But backwards. If you have a higher high, we mark the prior swing high, and Glenn, we take note of it. If either the buying pressure signal, the candle to the left, or the candle to the right, Glenn, if any one of these 3 candles are greater than or equal to the prior swing high, then Glenn, whichever one of those meets that condition, we're going to give them exhaustion arrows. Because when that happens, we usually see this. So Glenn, does my NQ 1-minute chart from May of 2016 bear any resemblance to the 615 signal right here on the Canadian chart a year later on a 15-minute histogram? Prior swing high would have been where? There's a prior swing high right here. And Glenn, look. Candle number 1 is the highest high, breaks that high. Right here. Candle number 2 is not equal to or higher than that high, so we leave it alone. But I've mechanically defined the pattern, haven't I? I mechanically defined the pattern. And that's a pattern number 5. And the expectation of a pattern number 5 is this. And Glenn, when we got to that time, did it do what we expected it to do? Yeah. Okay, now I'm going to teach you a little bit more about that in a second. The classic definition of a pattern 4 kicked in at the 10:15 signal. If we're being intellectually honest with you, I can't ignore it. That's what other guys would do. But at 10:15, Wayne, take a look. Do you see how it broke through at 10:15, Glenn, the prior swing low over here? At 10:15, candle number 2 and candle number 3 broke through the prior swing low. They were lower than this swing low. Any of them. So at 10:15, to be intellectually honest with you, I have to put a green arrow here and Glenn a green arrow there. Make sense? Okay. So now, how's this looking? Because this is a currency pair, right? This is trillions of dollars, not millions of dollars or billions of dollars. This is big boy stuff, big girl stuff. Are we in a 60 to 70% window of accuracy, Glenn, on a currency pair 2 days after with the 5 patterns that I've taught you so far? Now, just look at that for a second, because all we had before the market opened was this. Was this quote accurate? If you know what to look for. Was this quote accurate if you can learn 5 patterns? Malaza, does trading seem as hard as it did 2 hours ago? Or do you feel a sick feeling in your stomach? Are you saying to yourself, Mark, oh my God, who's shutting these guys down? Isn't this illegal? There's nothing illegal about this. They push the markets because they can. Steve, who's the newest of our customers, says, Michael, you have no idea, it's so much fun to trade. And here's the thing, Glenn, you see the signals to the right? Guys, what are we expecting when we get to 9:45 tomorrow morning? Glenn, it can be a pattern 1 or it can be a pattern 5. When we get to 1 o'clock tomorrow, Steve, it can be a pattern 1 or a pattern 5. 5 o'clock tomorrow morning, Glenn, it can be a pattern 2 or a pattern 4. At 4:45 tomorrow, it can be a pattern 2 or a pattern 4. Does that make sense, everybody? 8:15 on Sunday night next week, it can be a pattern 1 or a pattern 5. And I have the times up here already, Glenn, for Monday of next week. Does anybody have software besides ours that tells them what to look for 3 days from now? Does anyone else have software or seen webinars where it's this accurate 2 days after I gave 18,000 people the software? Yeah. Now, let me address Bruce's question, because in the pattern book I gave you, right here is what I expect. And I've amplified your answer key. Bruce, if we're in an uptrend, I don't expect to take a lot of heat at a signal 1. If we're at a buying pressure time, Bruce, I expect the market to immediately move out of that area if it's going to work. But Bruce, if I'm in a downtrend for a pattern 1, do you see what visually I'm expecting? I drew these candles a specific way. It's a horrible diagram, but it conveys what I'm trying to express. Bruce, do you see the chop that's expected at a buying pressure time in a downtrend? This is called a redistribution phase. And when we get to a buying pressure time in a downtrend, it tends to do this, Bruce. When the market is falling, one of two things happens. Bruce, there's either a small pullback or it goes into chop. Okay, and when you go back and watch this video, I've actually given you this diagram in the 4th handout, FLUX Setups Michael's Room. So Bruce, if you download that, you'll actually see right here this diagram. So in a downtrend, guys, ladies, if the market is moving down, when you get to a buying pressure time, Bruce, we expect it to chop or put in a small retracement. So it's a risky trade. That being the case, Glenn, what are the higher probability times in a downtrend? The selling pressure times or the buying pressure times? Which times do you think require the least risk with the most reward in a downtrend? Selling pressure or buying pressure? Selling pressure. Okay, so Bruce, with that in mind, so Bruce, with that in mind, what I'm expecting at 12:30 is chop until 2:45. Glenn, I'm using a 120 period EMA. That's been my go-to now for a really long time. But it can be whatever you want. So Glenn, the highest probability setups on this chart were 6 a.m. yesterday, 5:15 last night, 12 a.m. this morning. This candle closed below the moving average. So at 6:15, Bruce, we have a selling pressure signal. And then Bruce, look, the first candle to close below the moving average for me, Glenn, is right here. Do you see it? So when I see those two conditions as a filter, this now becomes for me a signal with trend. Just like this was a signal with trend, just like this was a signal with trend. Just like this was a signal with trend. Okay, so when you have that scenario, Glenn, I want you to look to hold the trade until the next signal. So 6 a.m. until 9:45. 5:15 until midnight. This one until 10:15. You see how that works? Everything that has a beginning has an end. Every cycle that starts stops. Nothing lasts forever. You have a 15-minute chart, you're going to have 15-minute cycles. You have a 1-hour chart, you're going to have hour cycles. You have a 3-minute chart, you're going to have 3-minute cycles. Anybody have any questions? If you have a pattern 4 or a pattern 5, ready? Customers, pay attention. This is new information. If you have a pattern 4 or a pattern 5, like these guys here, Bruce, or like these guys up here, or this guy down here. My rule, my personal rule for myself is the following. Glenn, I'm expecting a pullback, but I don't want to touch it because I want to take a trend signal. So Glenn, if the trend is down, I want to take down signals. But because of that crazy signal, Bruce, because it has that bullish connotation to it, it's sort of schizophrenic, right? It can be up, it can be down. What I do, Bruce, is I self-impose a breakout strategy 2 ticks below the low of the patterns. So Bruce, at this point, you see the low of the candle is at 79. I put a re-entry with the trend, Glenn, 2 ticks down. So it has to violate 2 ticks below the low of the patterns 4 for me to re-enter the trade in the direction of the trend short. Glenn, does that make sense? Jorge, does that make sense? Because if they pull back and decide, the hell with it, let's just go. If they break that line, then Glenn, I'm expecting them to do this. If let's say they broke it here, Bruce, I would expect them to continue the trade, to fall down now until 130. Melissa, does that make sense? And Glenn, whatever candle pierces that, I would put my stop above that candle. So Glenn, let's say this candle pierces that area and I enter. I would put my stop above the candle that pierced it. And the way my trading mind works, I use a 2-to-1 risk-reward ratio. So if it's a 10 pip stop loss, Glenn, I'm looking for a 20 pip reward. So I always have at least a 1.5 or a 2.0 to 1 risk reward. But I want you to see that if it goes through, because you're going to see an example of this in a second. And in my futures trading, Glenn, I have a max risk of 10 ticks. If it's more than 10, I wait for a pullback. But I wanted you to see there's a condition for a breakdown. Now, Bruce, up here at 615, the highest high candle, Glenn, is in the opposite direction at 41. 2 pips above that is what? 43. So Glenn, if it broke or touched 43, I would be looking for a trend continuation. And so in my room, I would have a line like this. Because I want to take trend entries. The trend is what makes most of the customers profitable. Can I tell you that over 10 years of watching and talking to traders, Melissa, that the overwhelming majority of people I've met who are making money take trend entries. Pullbacks in the direction of the trend. If I had to get a tattoo, that's probably what it would say on my mouse hand. Is this trade a trend trade. So Glenn, the last pattern 4 signal is this candle right here. Here's what I wanted you to see before we leave this pair. And I want you to see that I have a method, that I have mechanical rules in place. Glenn, the low on this pattern 4 signal of the 3 candles is at 580. 2 pips below is at 578, right? So Bruce, I would have instructed people, and I'm instructing you, to carefully consider going short, Glenn, right here for the trend continuation. Does that make sense? And so now when you look at that with those rules in place, how scary is this market? How scary is the CAD? Or let me rephrase the question. How do you feel knowing that you only have to memorize 5 patterns and you'll have a pretty good idea when during the day over the next 5 trading days you're going to have to be at your computer to make decisions? How many of you who are Flux customers do other stuff during the day or night and then scurry over to your computer when you know a trade is coming up? Just a quick show of hands. How many of you are finding you take bathroom breaks when you know you have 20 minutes before the next trade? How many of you leave the room to make a meal or go outside and walk around, mow your lawn, check the mail? Bathroom, laundry, lunch, water, the garden. Steve, isn't that amazing? Across all of these customers that are here, and they all say the same thing. I do stuff. Clean the cat box. Ew. 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 That's disgusting. Where would you put your entry and stop for the 10-15 pattern 4? Where would we have been expected a long trade and been stopped out? Okay. Bruce, if you follow the signals of the caveman strategy that I teach, the max risk I would have employed would be 10 ticks. At the time the candle formed, the high was here. So if I entered, Bruce, I would have had my stop just above that high. But my maximum risk would have been 10 ticks. So 78 to 88. You with me so far? Okay. So with a 10 tick risk, Bruce, I would have looked for a 20 tick reward. And I would have gotten out me right here. I would have moved my stop to break even plus 1 pip at 150%. My personal philosophy with the breakouts, get out quick. That's my personal philosophy. Pullbacks, hang on for the ride. So you'll see me in the NQ, for example, or CL. Bruce, when those breakouts come, I will tell people on a 1-minute chart, hold it for 6 to 8 ticks, and then get out. And it's a matter of personal preference. It aligns very closely with your risk tolerance. But if you employ a max risk strategy in that kind of a market environment, you at least have an idea of what failure means. Bruce, essentially this. I know that if it goes below this dot, that it is no longer a pattern 5. Let me restate that. Bruce, if it goes below the low of a pattern 4, it's not going to behave like a pattern 4. It's going to behave like a pattern 2 and just drop. Do you know what I mean by that? The banks should push up. That's what happens when I see this pattern. It should push up. But if it doesn't, then even they are scared. Even they're looking at each other going, I don't want to be in this market. Get us the hell out. What did Trump say? No, out. Everybody out. Close the positions. Out, 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 out. And so that's what this represents to me. If they go past that low, they're not done scaring people yet. And Bruce, at the time of that signal, you see how they hadn't run the stops yet? And this is the last thing I'm going to close with. This was the low that all the CAD traders were watching. And Glenn, look, they broke that low. And what did they do? They drove right back up. So Bruce, this is a stop run. And as of 10:30, they hadn't run the stop. There wasn't any panic yet. And at 10:35, they ran the stops. And those trades for me are fun because they're fast. Francisco, it's in the handouts section of the webinar. You have it. If you go to your GoToWebinar, it's going to look like this. You have it. You need to download it. It looks like this, brother. And if you want me to email it to you, please send me an email because I'll forget. I'm happy to do it. But you've got it in your chat, in your GoToWebinar box. Okay. Woo! Any questions so far? So everyone here is saying, Michael, since I started using your software, I do other stuff. And I want to address that as we start to wrap up here and close down. And I'm going to give you a chance to change your trading life. Here with me, right? I'm going to give you an opportunity to be a part of something wonderful. I want you to have the kinds of expectations that my customers have. But here's the most important thing that this software can give you. And this thing I can't underestimate. Let me find a good picture for it. When you're using the software, Michael, one of the things that most customers experience, if you're using lagging indicators right now, you're sitting in front of the computer and your brain feels like, how many of you know when you're driving for a really long time? You're driving for a really long time. You know how you feel when you get home? When you've been driving for a really long time, Melissa? That physical feeling right here. You know that thing in your head, Luis, where you just feel drained right there in the front of your brain? Nobody's talking to you, and you have a headache right here in your forehead. This is the frontal cortex, the frontal lobe, forgive me. This is where all of your short-term memory takes place. This is where all of your immediate decisions take place. And so, if you look at this, frontal lobe, thinking, memory, behavior. When you're doing all that thinking, Michael, it's taking place in this part of your brain. And so what I notice happens with customers is when they have that time to walk away from the computer and clean the cat box. Tracy, when people have that time to walk away and do a honey-do list or make a sandwich, their brain clears up. It's like a reboot in Windows. And I think all of that lactic acid, or however this works, all of that junk that's in there gets flushed out. And the brains want you, the banks want you to sit there as long as they can and get you to feel like that. And right now, most of you are losing money without the software because this is how you approach the market. Every bar is a trade. Every entry is a trade. And you're focused like you're driving on an 8-hour trip. And my customers, they stop the car after 3 miles. They get out. They walk around. They look at the flowers. They take a picture of the overlook. They buy a hot dog, they use the bathroom, they get in the car, and they trade. And then they take their trade, they take their setup, right? They take their trade, they take their setup, the trade works or it doesn't, and then Melissa, you're like, all right, that was a good trade. Ding, 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 ding. All right, 3 minutes till my next setup. Time to trade. And then they trade. And so you always know what's coming up next. You always know how long a trade has to go before the banks come back in and push it. And Bruce, it's not always going to be 100%. And we teach setups, we teach entries and exits. We teach different techniques to help you formulate a trading plan. But at the end of the day, I want you to understand there was an experiment that you all took part in. There was an experiment that all 50 of us here today took part in. A crazy maniac from North Carolina who sits in an attic office all day sent an email out on a Tuesday morning, or I'm sorry, a Tuesday evening. And I told 18,000 people what my computer had found, what your computer can find for gold, for bonds, for the ES, for the mini Dow, for the NASDAQ, for crude futures, for gold futures, for silver futures, for Apple and Google and Tesla and Amazon and Netflix, the Canadian dollar, the euro yen, the euro currency futures, the Australian dollar, the Australian currency futures, all of it. And the evidence, when asked what percentage of the time did the software work, nobody said less than 70%. Most traders are lucky if 10 to 20% of their trades are profitable. This is the opposite of that in these examples, as indicated by your answers. And so you have a choice. Which one of these people do you want to be? Do you want to be this guy who sits there and watches every bar and uses his piece of crap indicator every day? And I'm not judging you. I made the same mistakes. I bought the same junk software. I sat in the same crappy webinars. I listened to the same dishonest gurus as all of you. I'm in the club. I could be vice president of the Bad Decisions Club. But I also know after 10 years that this is possible. I know that it's possible because of what we saw here today. I know that it's possible because I gave 18,000 people the histogram forecasts 2 days in advance. And when we got together and looked at the results 2 days after the fact, and we saw what happened at these times, 60%, 70%, 75%, 80%. If we just waited for the signals in the direction of the trend, you'd have had a clue. And the really sad thing is that only one of you today, maybe two of you today, are prepared to make that decision. After all of the evidence I showed you, after all of the signals you saw, you're still sitting there thinking to yourself, well, I don't really need this, or I still got to take care of that other program that I'm in, or I said I wasn't ever going to buy anything else. Your brain is erecting 100,000 excuses today because you were prepared to quit. Have you ever heard of the fight or flight response? Did you know that your body wants to protect you from doing things that hurt? Your body wants to not do these things anymore. Have you ever heard the phrase self-sabotage? Did you know that's a psychological condition? Did you know that the things that scare you, you'll actually sabotage your own success? Because it scares some people to be successful. I didn't believe in such a thing until I met traders. I know that if I don't eat sugary foods and I exercise, Tim, and I lead a balanced lifestyle, that I'll be healthy and thin. I know this. And I talked to someone who was a therapist, and they said, you know, you're scared to death of being thin? I said, what do you mean? She said, well, right now you're funny. And you know how to control people because you're funny. And you're a little heavier than most people, so you use your humor to keep people at arm's length. But if you were thin and you didn't have that layer of defense, and you didn't have to be funny, all of a sudden, what if people didn't like you when you weren't the jolly, heavy guy anymore? And dude, I started bawling. She said, you're self-sabotaging yourself. You know what you need to do. You're just afraid to do it. And so many of you today are self-sabotaging, even as you've seen the evidence that I couldn't have faked, that I couldn't have influenced in any way, shape, or form with patterns that I gave you 2 days ago. You're reaching over right now and you're grabbing the saw. You're putting it in your hand. You're putting it on the branch and saying, no, I was this close to not being a trader anymore. I'm almost out of this. You mean we have to go back and do it right? No, not today, Jose. No way, no how, Some of you, though, like Steve, some of you are not sabotaging yourself, and you want to know how to get started, and I'm going to give you that link right now. If you're ready to be that person that I described in the beginning of the webinar, the one who says, I want to be successful, I don't need camaraderie, I don't need fellowship, I need money. I don't want to be a sheep anymore. I want to be in control of my destiny. Please look in your chat box right now. Does everybody see that link? Thank you, Bob. If you would like the software, you're going to get all the indicators that I used here today. There's quite a few of them, but I've only used 3 for 98% of what I did. I used these 2 histogram indicators, and I used this time cycle marker indicator to generate 98% of everything that I did, which means you don't need this one, this one, this one. Whoop, not this one, this one. You don't need any of these, but I'm giving you all of those. You're only really using it for these 3, but I'm giving you a ton of other stuff. Ninja 8 version is available. Bruce, you just have to send an email to Ron, and he'll send you a copy of the code. It's coming out of beta. We're just kind of trickling it out to make sure everything's good. But so far it's been tested. It works in NinjaTrader 8. It works in NinjaTrader 7. My personal opinion is stay in 7 as long as you can. But if you're in 8, it's ready. You're going to get all the software. I am going to make sure you learn how this works. We're going to install it for you for free. TradeStation, NinjaTrader, MetaTrader 4. I'm going to meet with you 2 different times, an hour apiece. Steve, you and I are going to dance. And I'm going to teach you what I know. I'm going to set up your charts. I'm going to give you my workspaces. I'm going to give you the best settings from the customer feedback after 10 years. I'm going to give you my best settings. I'll give you anything you want. I want you to succeed in terms of settings and knowledge that I have. So you get 2 one-hour sessions with me. You get the 1-hour installation session to make sure it works. Then you're going to get 6 months of classes. We meet 4 days a week. And we meet from 8 a.m. to usually around 11:30 a.m. Monday, Tuesday, Wednesday, Thursday. Thursday nights, you got this class. 5 times a week, you have someone holding your hand for half a year. And then if you're an overachiever like Melissa, you go back and you watch the training videos online. We have an archive, a library that you can go and sit and review and brush up on stuff. Things that we forgot to mention in a class. Stuff that we don't teach anymore because we're doing new things. All of it has been archived. Most people charge what I'm charging for the software for the training. And you know this. Don't self-sabotage now and talk yourself out of it. You're right there. You have 3 opportunities. The first one is a full price payment of $19.95. I take $500 off the web price for coming into the webinar. You can also break it into 3 payments, or you can break it into 4 payments. These are real customers talking, by the way. They don't benefit. I don't benefit at all from anything they say. You can say bad things about me now, You can say good things. I don't care. This is an open forum. Share your thoughts. If you would like PayPal, I can send you a PayPal invoice, and with PayPal credit, you have 6 months to pay it off. And you don't have to pay anything for 6 months with PayPal credit. So you have 1 option, 2 options, 3 options. Let me know about the PayPal if you want that option. Or you hit that orange button. You pick the plan you want to use right here. You fill in your stuff and you hit checkout. And on the other side of that, is this. And if you don't hit that button, I got nothing for you. I can't make you buy this. But at the beginning of this webinar, I told you what I'd do. I told you what the experiment was. No other tool builder that you have access to as a little guy is coming to help us. I want to leave you with one thought. It's one of my favorite PowerPoint slides. You win battles by knowing the enemy's timing and using a timing which the enemy does not expect. When Goldman moves, we move. When JP moves, we move. When they stop, we stop. When they trip out everybody's stops, we trip out everybody's stops. We're not here to make friends, we're here to make you money. When they have a false breakout, we don't take it. When they have a false breakout to the downside, we don't take it because we know what's coming. We have a clue as to what to expect. I don't know what else to do to prove this to you. We've done it in gold. We've done it on the crude futures chart. We did it on the E-mini S&P. We did it on the Canadian dollar. I don't know what else to show you to prove that this is happening. And if you've seen all of this and you say to yourself, nah, then my honest advice, based off of working with probably over 10,000 traders, is you probably shouldn't be trading. You should probably take the money in your account, wire transfer it back, put it in a CD, put it in your retirement account, give it to a charity, because when you lose it, Goldman isn't giving it back. When you lose it, there's some guy behind a desk on Wall Street who buys his wife a new Lexus that year. When you lose it, it is the worst feeling in the world to know that you lost it because you didn't know what you were doing, or when you realize today that it was rigged. You were taken. You can accept that and get your money back and fight fire with fire, or you can keep doing what you're doing, which is the definition of insanity, if you ask me. If you need to contact me, I'm going to give you my information. We would love to be working with you. We treat customers like family. And part of being a family is knowing how to get in touch with each other. This is my mobile phone number. If you can't get in touch with someone, you're probably not family. And so that's how to reach me. The offer to get started and have that wonderful silence is in your chat box. Easy, Tim. Very defensive when it comes to her. That's I want to get to know you. I want to help you. I want to teach you everything I know. I want to help reverse the self-sabotage cycle that you're engaged in. I want you to benefit from the experience of everyone on my staff, from our customers' experience, from the tools, from the laws of people 100 years ago like Gann. It's available, but I can't make you hit that orange button. It's on you. Beg, borrow, and steal. Sell your moped. Sell grandma's antique plate collection. Do what you got to do. Ask me for the PayPal invoice if you need it. Get set up. Let's start the party here. Okay. I will see all of you in the not too distant future. If you have any questions, please reach out to me. It is traditional to end the software demonstration with our Alan Stone theme song, which is Freedom. Many of you asked me for that link. You like the song. I'm going to put it in your chat box so you can bookmark it. I wish the personal freedom for you that you want for yourself. I want you to take the money back that the banks have taken from you. I wish that you have the freedom to go the places you want to go, the freedom to support the causes that you want to support, the freedom to be with your family members that you mean the most to and who mean the most to you, the freedom to travel, the freedom to live. Trading affords many people those opportunities. There's no guarantee, but if you work hard, you study, and you use the weapons, the weaknesses of the banks against them, I personally think you have a better shot than most. So, have a great night, everybody. Those of you that are customers enjoying your freedom, continue to send me the feedback and the notes describing that, and I appreciate that good news. Have a great night, everyone.
Every day when I find breaking through my chain, supernatural kind. Hey, I'm looking for freedom. I gotta get free. You give me that freedom. It's rushing through me. Come on, love. Get free, baby. Tired of the chain up, baby. Make love to get free, baby. Tired of the chain up, baby. Make love to me. Faces all spreading all over my mind. Predictive, I'm chasing the spark in the night. I've been searching around, turning every stone. On the world upside down, can't leave it alone. Every day when I find breaking through my chain, supernatural kind. Hey, I'm looking for free. I gotta get free. You give me that free. It's rushing through me. Get free, baby. Tired. Drink up, baby, make love, get free, baby, die up, drink up, baby, make love, come on, clap, hey! Oh, hallelujah, pumping right through it, holy, no. America. Thank you, Capitol Records. Thank you, Mom. Good night. Didn't let me cut me off.